Start your business day right. Morning Drive with Tim Elliott on Mira Business FM.
We're live on the Morning Drive here on Mira Business FM. We're on the website mirabusiness.fm. We're also live on YouTube, we're on Twitch, we're on Rumble, we are on Dailymotion as well. Everything we do is podcast, so you can find our stuff, if you like, on the podcast platform of your choice or on the website as well. And a subscription or a thumbs up or an emoji or however you choose to communicate, we always appreciate. So you can find us Mira Business FM, info@mira.fm. And then whatsapp.mira.fm to get in touch. Now, this morning, we're very pleased to welcome Dr. Adnan Aziz. Now, Dr. Adnan is Chief Program Officer of the Global Islamic Finance for Climate, Nature and Development. He's also a professor, and he still lectures on a regular basis and is often an invited speaker. So, finance, specifically Islamic finance, is what we're going to be discussing. A question of, and I know this is a slightly contentious statement, but we'll ask Dr. Adnan, is your money halal? I know there's something in that statement, but Dr. Adnan, good to have you here.
Oh, thank you very much, Tim, for inviting me over. Apologies for my sound quality, not in the best of my health, but hopefully I'll do better as much as I can.
Well, I have to say, if this is not the best of your health, you sound pretty good to me, so don't worry, we can understand you.
Right.
Let's talk. Look, there's often a tendency to kind of discuss financial matters at a very high level, as though everybody knows every financial acronym or financial phrase. And sometimes finance is discussed in obscure language. So I want to stay away from that this morning and go kind of back to basics, almost like an Islamic Finance 101, if you like. The basics. Islamic finance today is a major financial sector. We've seen growth. I'll come to some of the figures in a while. Assets valued at something like $3.38 trillion annually, around about there, or perhaps as high as 5 trillion. So there's a huge range. It's a big deal, is what I'm saying. Growth is driven by demand in the Middle East, in the GCC, and Asia primarily. Projections are for something like 7.5 trillion by 2028. So that's kind of the background to this discussion, which gives us some context. To start with, though, I think it's kind of necessary to say, look, it's an industry that is far more than that net value for Muslims. This is something that appeals to beliefs and, the way that you want to live your life. In some ways, it joins kind of the code for your life, doesn't it?
It does. And, if I might combine a few things here. First of all, you said, is money halal? Now, money on its own is neither halal or haram. That's something is part of a misconception, or sometimes we just say it without necessarily realizing that. Money is the use of the money, which is what makes it halal or haram.
Right.
Okay. So that's something I thought at the outset to sort of clarify.
Good.
So I can use money. You can use money on its own. Is nothing but a medium of exchange. Money is a store of value, and money can be treated in those fashions, but it's essentially, if I feel hungry, it doesn't have an intrinsic value of its own. But if I want to eat something, I must exchange this money for food and then use it for a value. So this is where the value comes from. So I guess that's important to make a point. So as such, money is halal. Its use could potentially make it haram.
Right.
If I were to buy it, so for example, from Muslim faith perspective, if I were to use it to buy wine and drink wine, then it becomes haram.
Sure.
It's the use for that.
Yeah.
Secondly, to your point, absolutely correct. Depending on the source we are looking at, then the size of the industry as of today varies from $3.7 or $8 trillion to $5 trillion, and it is certainly a growing industry. The projections are also in line with the growth trend we are seeing, roughly around 10% per annum in double digits. So hence why one would expect that to be the size. Now, so So the part of your question, the second part was about you wanted to know with reference to the numbers. What was your particular question on that?
It's just the projections, the growth that we may see in the next 2 to 3 years. If we take somewhere between 3.38 trillion and $5 trillion, that's 20. Those are 2024 figures, depending on, as you say, the quote, the source that you quote. Projections are something like $7.5 trillion potentially. So if you look at that compared to the lowest projection, that's doubling in 3 years, which is, I mean, that's stratospheric growth, isn't it?
What is also certainly, and also just to add to that, as you rightly mentioned, it is growing, but the growth is to come from all sort of sources.
Okay.
Geographies as well. Yes, it is more concentrated in Asia, or even more specifically in Middle East or Gulf, and South Asia, for example, Far East. But Islamic banking and finance industry practice is there in more than around 85 countries in the world, and there are only 57 Muslim countries. So that means, by implication, there are countries which are not necessarily Muslim countries, like UK, US, other places. So the reason Islamic banking and finance industry has found its way into various geographies, non-Muslim geographies as well, is because there are in some places, because there is sizable Muslim community and there's a demand, but also there's a business case for it. So anyone can open a shop and make money out of it. So it's a business in the end. Islamic is also part of a misconception. Sometimes some people think if it is Islamic, they all of a sudden they would like to think of charity alongside it as well. But it is not a charity. It is a commercial business. It is there to make money for its shareholders and the depositors who put money with the bank. So it's actually a fiduciary role of any financial institution. They have to protect the capital and they have to make money for those who put that money with them. So that's what makes a business case as well. And hence why I'm sure, Tim, you've been you've been in the financial industry as well. You've been covering it in past too, and you know that Islamic banks and financial institutions do interact and engage with non-Muslims too. You yourself perhaps have done that.
Well, I have, and I said this to you before we were on air. Look, I worked for a financial magazine for a long time, a personal financial magazine. So we would look at savings products and credit cards, and those kinds of structures. But we also looked in some depth at Islamic finance. So I'm kind of au fait with some things. I've had an Islamic finance, a non-conventional, an Islamic car loan in the past. And one of the points I made to you was that, I kind of liked it because everything was agreed up front. I knew exactly what I was going to pay, and I found it to be, transparent. It was easy to understand. It worked for me. And to your point, Islamic finance or financial principles are, they're present in 80 countries, I think you said. It's not as though Islamic finance is just for people that follow Islam. It's for anybody that thinks, that works for me.
Exactly.
I could take part.
I think if you allow me to perhaps also mention that why did we need another banking system?
Well, I was going to ask you for a quick kind of history lesson on that, the origins, because it's still a young industry.
It is. It is about 5 decades old compared to centuries-long conventional counterpart. And it's still, although 5 trillion, even if we take the upper quote of the 5 trillion is the current size of the industry, even that is still close to around 2.5% to 3% of the total global size of the industry. So it's still a small part. Now, what is important to understand that Islamic banking and finance industry differentiate itself from the conventional counterpart primarily on the basis of principles it follows. Now, there are certain principles which are important for Islamic or faith-based principles I'm referring to, on which this is based. They particularly, I'm sure, more commonly known one is prohibition of interest. Yes. Right? Yeah. Now, that's one reason why Islamic banking and finance industry need to come into play. Now, so if I were to look at banking as an institution, the purpose for which these institutions exist is nothing against, it is not against the Islamic purposes. It is in line with what Islamic, any Islamic system would want as well, for most part of it, to be an intermediary, to facilitate, to have help save those who save the money, those who needed the money. So you need to keep wealth in circulation, and this institution allows that fundamental Islamic economic principle to be intact, which is circulation of wealth. So it allows us to do that. So there's nothing wrong with banks per se. The problem, however, is the way, and this is more from the Islamic perspective, that in order to achieve a correct or a legitimate purpose, the pathway which is adopted by conventional system is challenging from Islamic perspective, i.e. loans. You know, if you look at in a very simplified way, conventional banking and financial industry is based on a loan contract. So either side of the equation, the asset side or the liability side, you either borrow money from the depositors, and depending on the kind of account that they open, you will pay them an interest on that as well, or you will lend money to those who need money for the car, for the house, or whatever, or for personal finance, personal consumption, and that money would be lent to them, and they will pay back certain return, which is interest on that. Now, loan per se is also not problematic in Sharia. Just bear that in mind. But loan is considered to be an act of charity.
Okay.
So if we know already that the loan is being given for a purpose which is not for a charitable, it is someone's saving, they're giving to you, they're not doing charity with you, you're not doing charity with them, then you cannot use a contract which is not compatible to the arrangement you want to get into. So hence why the Islamic banks and financial institutions look at the purpose for which you need the money. So if you needed money for the car, for example, so in a conventional arrangement, you would go to a bank, they would lend the money to you, you will go and buy the car from the showroom, and you will have that car mortgaged to the bank as a security.
Yeah.
Right? But in case of an Islamic institution, if they were to lend money, they cannot ask more than that back. So because that's what the loan is. In Islam, loan with interest is prohibited, loan without interest is not. That's absolutely fine, but it doesn't serve the purpose then, because that's not the money is there for. It has to make money for itself. So the way it works is that the bank would, however, what is permissible is that, okay, bank can buy, and this is what they do. So they say, okay, you need car, we will buy this car for the cash price from the showroom for ourselves, and we'll sell it to you with a mutually agreed profit margin declared transparently declared to you, and we'll let you pay the price in installments to us. Now, the way we price it, however, is equal to what the market is for conventional too, because it is not how much money banks make. It is about how do they make. So Islamic banks in a business, they would like to make the same amount of money as others do, hence why they price it similar to what the conventional banks would do. But they do it through a trading arrangement. So buying and selling. So when you buy and sell, you are exchanging not money for money, you're exchanging money for an asset. And hence why we tend to refer to it as asset-backed or asset-based system as well. There's always an asset involved in order for us to transact, either side of the equation. So just to give you a crux of the fundamental difference and the way it works.
It's interesting that because, and it's a really good example. The car loan thing is a really good example. It just seems to me that there's another kind of side benefit to that as well. If you put an Islamic loan, let's take an Islamic car loan, side by side with a conventional financial car loan, when you explain the principles and you look at the loan, they're very similar offerings in lots of ways. So the way these things are structured are, I was going to say enticing, that's the wrong word, but they're attractive, I guess, to anybody, because this is easy to understand. Whether it's an asset-backed structured financial product in Islamic finance or conventionally just a loan for interest, it means that customers pay the money, take their choice, obviously, but it means that the industry is on principles that we all get.
Tim, I tell you something. As you absolutely rightly put it forward, that this looks very similar.
Yeah.
Now, this is one lens, but there are people who would have a different lens as well. They say, we are essentially just circumventing it and doing exactly the same thing. So it's part of the criticism too. When things are going okay, it doesn't feel like there is any value add because the substance we are achieving is the same. I'll give you a real life example from this country.
Okay.
You know, Abu Dhabi Islamic Bank.
Sure.
I have previously worked for them as well as a senior vice president, but it's not in my time. It happened in the 90s. It's a real case study
Okay.
and interesting. That's where you will start seeing the differentiation, basically.
Okay.
It was in the 90s, late 90s, when the systems of the RTA were not yet automated. I remember buying in that time a car, a second-hand car, and it was a paper work, and the process was for me to go and to the RTA office, traffic office, and get it registered there in my name. That used to be the process. So, and there was a kind of a window of a time in which we could do it. One customer walked in, someone like yourself or myself, not from the UAE, not a UAE national, but working doing a decent job in Abu Dhabi, went to Abu Dhabi Islamic Bank branch and asked that I need car loan. I want to buy a second-hand car from someone and I need money for that. And they said, no, we don't give loans because we are an Islamic bank. However, we can buy this and sell it to you with an agreed profit margin.
Right.
I said, fine, let's do that. To cut the story short, it happened, he walked away, whatever was the process followed. I think he paid one or two, at least one installment he paid already, first installment. But he was so busy, he just didn't get time to go to the Marur or traffic office and register it in his name. But he was driving and someone hit his car. He was involved in an accident and the police came. The police came, they actually saw the car, they saw the guy, and they arrested him. Said, look, it wasn't even my fault. Why are you arresting me? Said, no, we are not arresting you because of the accident. You are driving a stolen car. Said, how on earth? I never stole this car. So this is your job to explain to the court, to the judge. We'll take you, we'll present you to the court, and you can explain it. But you are driving a stolen car. It is on record. So they took him to the police station, and they were doing the process. All of a sudden, he realized that in his car, he had paperwork of having bought this car from the bank. If anyone who stole the car, in theory, was the bank then, because he bought it from someone which is a legal entity.
Sure.
So he proved it to them. So this looks different now. They saw the paperwork. They went back. The bank people, the managers and everyone tried to, they didn't want to take the responsibility. The board took a view. No, this was actually bank's fault. So part of the process was that you should do your due diligence before you become a legitimate owner of something and sell it to someone else. You must make sure that you're buying something which is right. So the bank staff at the time just did it for the sake of formality. They didn't check the details. They didn't go to the traffic office at the time they needed to go there to verify. Now you do it on the system there, on the desk.
Yeah.
Now, why I gave you this example, because this came from the discussion we had, that when everything is okay, we don't see the difference. But here what happened? This guy, because the sale became invalid, you could not sell something you don't own. So the sale became invalid. The installment he had paid had to be returned to him. There was no obligation for him to pay that amount anymore, and there was no charge on him, and he walked free. So there was no obligation. Imagine if that person had gone to a conventional bank. The bank would say, our contract said you borrowed this money. The car was not there. We never sold the car to you. The car was a security. We lost the security. You still have an obligation to pay this loan to us. Wherever you get this money from, you still have to pay. And he would have to explain to the court that he wasn't actually the one who stole this car, and that he will not be able to do because that person who sold this car had already fled the country. Okay, so the point of when things go wrong, that's when we start seeing the benefit, which is for humanity as a whole, not just for anyone doing it, for that matter. In fact, I don't know if we have time. I can give you another example from the home finance, which in 2016 you would remember. I was sitting in the balcony of my apartment. I saw this flares coming through the address hotel going on fire.
remember that.
At the New Year Eve. Basically.
New Year's Eve, that's right.
Yes.
Yeah.
I saw it happening. I was in the bank at the time as well. And what happened there? In a home finance arrangement, a conventional bank would say, we are lending the money to you. You use this money to buy the apartment or the house, and you will pay back this money with interest.
Yeah.
The house is a mortgage. And for Islamic, however, it works differently. It works on a leasing model. So Islamic bank would buy the asset, buy the apartment or the house, and lease it to you. Long-term lease, at the end of the lease period, similar to hire purchase, but not exactly, I'm just simplifying it. But at the end of the period, they would sell it to you for a nominal price and make you the owner.
Right.
Now, in this period, you are technically a tenant.
Yeah,
Now, if I rent my apartment to you, you pay the price for the use of it, right?
Okay, yeah.
Now, if for any reason, not because of your fault, for any reason, the use is not there anymore, would you pay rent to me? Of course not.
Right.
That's exactly happened in this case. So those customers of Islamic banks who had apartments in the address hotel from Islamic banks, no Islamic bank could ask them to pay rent anymore.
Right.
And the conventional ones, however, said you still have to pay us. Now, in their case, they had their individual insurance cover they were pursuing. And individual cover takes time to make the claim. Here, Islamic Bank, because they have portfolio of assets owned by them, so they have a cover and they can pursue as an institution, get the claim very quickly. So they manage, and they know that they're losing money. So they were able to get their claims and then reinstate them or give alternatives or whatever, and then that's how they were able to start getting their rental. The point I'm trying to make, the benefits we start seeing of a contractual arrangement which actually is there to protect the society. The last point to make, the purpose of any Islamic principle, any Islamic arrangement is to ensure social good. And if that is what we need to, the two examples, these are real case studies from UAE, and there are many more we can talk about, but they kick in only when things go wrong. Yeah. When things are okay, no one sees that. So I thought I should give those examples in the interest of explaining how Islamic finance works.
You know, it's so interesting, this, and we are so short of time. I've got another guest coming in. We've got a couple of minutes, but I think we're going to have to invite you back because I've got lots more questions to ask you. So I'm there's an open invitation for you to come and join us. But I think you make a really good point because Islamic financial products are based on, as you say, it's about sharing risk. This is not risk-free lending. This is the idea, as far as I can understand it, is, you know, what you're trying to do is promote real-world kind of economic participation that people can be involved with. It's almost more like an offer rather than a sold product in a weird kind of a way, you know. But it's also about promotion of fairness, isn't it? I think that's really key to understand.
It is. You know, time is not on our side, but hopefully I will come back and talk about the global example. I gave you two local examples.
Yeah.
2007 and 8 crisis,
right.
Global financial crisis. One reason Islamic banking and finance industry was relatively protected compared to the conventional one, it's prohibition on trading of debt at a discount. Which was the basis of financial crisis, global financial crisis.
Yeah.
So Islamic banks and financial institutions had no portfolio which was built on that basis, and hence why they were relatively immune to the global shocks. So again, there are many benefits to that. So we can talk about it at some other time. Just wanted to say that there are real life examples which confirm or which sort of validate the case. Not only the business case, but also the social case for such kind of industry to flourish and continue to flourish.
I got to tell you, your examples are so much better than my questions that I had planned were anyway. So it's kind of worked out for the good of anybody listening or watching this. So look, an open invitation for you to come back. There's loads more questions I want to ask you.
Happy to come back.
To try and get across or to get an understanding of Islamic finance. For now, Dr. Adnan Aziz is Chief Program Officer of the Global Islamic Finance for Climate, Nature and Development. He is a professor and often a speaker. It's been a real pleasure to meet you. Thank you.
Likewise. Thank you very much for inviting, Tim.
Thank you for coming in. This is Mira Business FM.